Some relief for the street. After 4 straight sessions of losses, the Nifty holds near the 23,500 mark with the rupee fall arrested for now. Broader indices see slight outperformance with largely muted trade across sectors. IT and auto drag while metals shine. The RBI governor is joining other policymakers in warning about the current external shock. Sanjay Malhotra says India may eventually need to raise retail fuel prices if the West Asia conflict continues. He noted that OMCs are currently absorbing the higher crude costs. Jewelry stocks declined after the government sharply raised import duties on gold and silver to 15% in a bid to curb imports, protect forex reserves and support the weakening rupee. Titan, Kalyan Jewellers and others came under pressure as higher duties could impact demand and margins. Gold financiers gained after the government raised bullion import duties, with IIFL Finance, Muthoot Finance, Manappuram Finance advancing on expectations of higher gold loan values as prices rise. Meanwhile, Hindustan Zinc also gained with higher silver duties seen benefiting domestic producers. Cipla reported a weak Q4 as expected, with profit plunging over 50% and margins contracting sharply amid pressure on US business and softer operating performance. The company announced a final dividend of 13 rupees a share. Berger rallies after posting strong Q4 earnings led by robust volume growth, margin expansion and improving demand trends across decorative and industrial businesses. Cohen slipped after management commentary indicates growth may only pick up in the second half of FY27. Bharti Airtel is expected to post a steady Q4 with earnings supported by strong growth in homes and Africa businesses. Margins are likely to improve sequentially, although subscriber additions may moderate and ARPU is expected to remain largely flat. Hello and welcome. We are watching closing trades here on ET Now. I'm Harsh Saita. 0.5% higher on the Nifty as we speak. The Nifty IT is the one which continues to sulk. In fact, 1% lower on the Nifty IT index on the back of the 4% of losses that we saw yesterday. This certainly, the pain here certainly seems to be increasing. But it's in fact a positive day, and let me keep the rhetoric positive as well. 0.5% higher on the Nifty Bank. The Nifty 500 also doing fairly well for itself. Broader markets doing well. Percent higher on the Nifty mid cap, the small cap index up over 0.5% thereabouts. So you're seeing a decentish kind of a day of trade, especially after the couple of days that we've seen, which have really seen pain. In terms of sectors, I spoke about IT. Auto is the other one, which is a bit of a drag, 0.5% lower. Metals, defense though, shining, 2.5% plus higher on the Nifty India Defense Index, 3% higher on metals. Oil and gas up 1.5%. Energy back, bouncing back 1% higher. 0.2% higher on the Nifty FMCG. The Pharma Index also up around 0.6%. So you're seeing some very decent moves coming through. The Nifty Bank more subdued. There's an underperformance there versus the Nifty 50 Index, which seems to continue. The Nifty PSU Bank is another pocket of weakness, which kind of is spilling over on the Nifty Bank as well. When you're looking at the breadth, well, it's a bit of, or rather, it's a breath of fresh air. 2:1 in terms of the ratio. For the advances versus declines, at least on the Nifty 500 index, that's the ratio that we are playing with. In terms of the Nifty 50 names, some of the Adani names doing very well in trade. Adani Enterprises up 4%, Adani Ports up 3%, Asian Paints up 4.5%. Some very nice bounce seen there. And from the 2200 levels, we've seen a very decent rally now on an Asian Paint. So that one is the other one. BEL, you know, your usual contenders, Tata Steel, BEL. When metals and defense does well, typically those two will do well, are some of the standout performers on the Nifty 50. Power Grid down 2%, Eicher Motors down nearly 1.8%, M&M down 1.4% are just some of the drags. Infi, Telecom, TCS on a day when IT continues to sulk. Those are the names which generally rotate out, and that's exactly what's playing out. Last couple of days, we've seen a massive amount of pressure on some of these counters, and that seems to continue in the day of trade today as well. Among the auto packer, Maruti and the like also sulking and trading in the red. Within the Nifty 500 basket now, Pine Labs, lock-in expiry 14% lower on Pine Labs on the back of lock-in expiry. 80% of the equity capital was up for lock-in expiry today. 14% lower on a Pine Labs. Torrent Power is the other one, 7% down. Cohan's down 6% on the back of numbers and commentary. Sun TV is the other one, which is sulking 5% lower. eClerx is down 4.5%+ along with the rest of the IT. Pack AFL is the other one, which is taking a bit of a hit, 4% lower on that one as well. In terms of the gainers, metals is the tilt. SAIL is up 13% in trade. Vodafone Idea is up another 8% now, inching towards the 13 rupees a share mark. Dixon Tech is up 7.5%. Earnings were largely in line, but commentary seems to be extremely strong. IFCI, NMDC Steel, Berger Paints, Berger Paints again on the back of numbers. Vedanta is up 5.5% again, owns Hindustan Zinc. Silver is the play over there. And of course, that entire demerger seems to be playing out very well on the stock price as well. Let me in fact go across to Karan. He's standing by with all of the stocks you want to keep on your radar this afternoon.
Well, let's start off with L&T. The power transmission and distribution vertical of the company has secured a batch of EPC orders from customers in the Middle East. The order value ranges between 1,000 to 2,500 crores, followed by Tata Power, wherein the company has reported a mixed set of numbers. While the EBITDA has missed the street estimates, the profit after tax has surpassed the street expectations on the back of a one-time regulatory gain to the tune of 340 crores. Followed by Torrent Power, wherein the company has reported a weak set of numbers, missing the street estimates on multiple fronts. Moreover, the profit saw a significant decline and stood at 331 crores. Siemens Energy is also in focus on the back of the parent company raising its full-year guidance. The company now expects to achieve a revenue growth in the range of 14% to 16%, which was earlier in the range of 11% to 13%. MTAR Technologies is also in focus as the company has reported a good set of numbers, wherein the profit has tripled to 44 crores. The order book of the company stands north of 2,500 crores with a book-to-bill of 2.8 times the 12-month revenue. Moreover, the company has raised its FY27 revenue growth guidance from 50% to 80%. With a PE multiple of 200 times, the stock has quadrupled in the past 1 year. So do watch out for MTAR Technologies. Pine Labs is under immense pressure as the lock-in period ends for 80% of the outstanding shares today. And lastly, we have LTM in focus as the company has announced the launch of BlueVerse Max. This enables brands to deliver AI-powered personalized experiences to their customers across multiple geographies.
Okay, thank you so much for getting us that, Karan. Some of the names which are buzzing in trade. Let me in fact go across. We're joined by Kunal Bothra as we always have him in studio. 0.5% higher. Kunal, on a day like this, how are you viewing the market?
Yeah, I think good afternoon first of all, Harsh. We were discussing this in the morning that the markets are due for a bounce. The indicators are deeply oversold on the benchmark indices. So this calls in for a good respite for the index in the near term. Hopefully, I think we may probably expect, at least the next 1 to 2 days, the markets trying to just about float about this critical support of 23,000, 23,350-ish kind of a zone, which we tested yesterday and today morning. But I think what we need to also see is that whether the move today is led by a lot of short covering. We were discussing this point earlier that there has been a huge jump in the open interest on the Nifty futures as well as on the Bank Nifty futures in the last 5-6 days of the markets, where there's been a 45 lakh jump in the open interest for the Nifty and one of the highest open interest for the Bank Nifty in the last 2 to 3 weeks. So that itself tells you that if the markets have to move up higher and if this just doesn't become like a solitary single day up move, then you need to see a decent amount of short covering. Even a 4% to 5% kind of a short covering for both these indices could probably trigger a further up move for the index. But so far, so good. I think we've bounced back from those oversold nature of indicators, which tells you that the market texture is a little bit better than what it is in the last couple of days.
You're expecting short covering in the Bank Nifty, Kunal? Is that what I'm catching correctly? And is PSU Bank still the tilt?
Yeah, so short covering across the board. So short covering across both the indices majorly, because what happens is in a falling market, it becomes very difficult to try and pinpoint which sectors and which stocks would underperform if it's a short-lived kind of an expected correction. So the best hub in those kind of time zones, they generally become indices. And that's why you see a sudden tilt more towards the index futures being more favored in terms of creating fresh shorts. Now, when the markets reverse course, and if traders expect or believe that maybe that near-term correction has panned out, and they would want to now start booking out profits or at least cut down their short positions, then we go back into that tilt of looking at the index futures stance. That's why I believe looking at the index, both the Nifty and the Bank Nifty futures, and the reduction in open interest could be the first major signal to watch out for. And if that happens, it could be short covering across the board, both on the PSU banking names and the private sector banking stocks.
Interesting. And so is there a tilt or a preference within the two, and any stocks that you can give us within the Bank Nifty which one can play if at all this bounce were to play out?
See, interestingly, I was looking at the charts from the private sector banking names, and there are two odd names, in fact, three odd names which have started to look a little bit more resilient. So I'll call it resilient, not maybe a stronger degree of outperformance. And those three names rank up in the order of Kotak Bank, you've seen Axis Bank and ICICI Bank. These three stocks were the major reasons why the markets had fallen, or the Bank Nifty had fallen, specifically on the back of weakness on the private sector banking names. But apparently in the last 2-3 days, there has been a lesser degree of price correction into these three stocks. And today in the first half, when the market showed signs of comeback, I think names like Kotak Bank, Axis Bank, etc., they were the ones which bounced back quite decently from their intraday lows. So it tells you that maybe I think this could be a pocket where traders could keep an eye on. PSU banking names, I'm not sure whether the degree of short covering could be severe, because we are looking at a point where SBI is still struggling around the 970-ish kind of a mark. So till the time SBI doesn't make a strong comeback, I would believe that there could be just about very feeble attempts towards covering off short positions for the PSU banking names.
Okay, any other sector tilt that you have, Kunal?
So today there are fresh sectors which are showing signs of breakout. Yes. Paints, for example, have started to show signs of a breakout for themselves. The OMC stocks are looking attractive. My sense is that maybe there could be a wave of short covering over here also for the OMC names. And defense stocks they've been doing fantastically well. So I think these are the 2-3 fresh sectors which are starting to look a little bit more better than what they were poised in the last few days.
Interesting picks therefore, Kunal.
So two buy calls. The first one apparently is the one Grasim. Now a very strong chart in the making. The stock has come back very close towards the breakout of the 3,000 levels for Grasim. So would look at higher targets of 3,030. Stop loss to be kept at 2,900 for Grasim. The second would be a barn Nestle. Going with the fact that the entire FMCG stocks would continue to shine and outperform. Nestle is something which continues to look attractive at the current juncture, trading at 1475 approximately. Would look at a target of 1,545. Stop loss could be kept at 1,440.
Okay, and the other one is some of the telecom stocks. They are in focus. In fact, Kunal, I'll come to you in a minute with regard to that. Let me go across to Darshita. She's here with what to expect from Bharti Airtel's numbers.
Well, yes, Bharti Airtel is going to report its Q4 FY26 numbers, and the expectations suggest a stable quarter with margin expansion remaining the key highlight. Starting off with the headline numbers, the consolidated revenue is expected to come in around 54,615 crores, which translates into a 1% sequential growth. EBITDA is likely to rise nearly 3% QOQ, coming in at around 31,700 crore rupees, while the margins are expected to see an improvement of around 100 basis points, coming in at 58%. Meanwhile, the profit after tax could see a sharp jump of about 16%, coming to nearly 7,700 crore rupees. Now coming to the India wireless business, the revenue growth is expected to stay modest at around 0.8% QOQ, which is partly impacted by 2 fewer days this quarter, while the ARPU is likely to remain stable at nearly 259 mark. Although the subscriber additions may soften slightly, also, the analysts are estimating that the mobile net adds of roughly 39 lakh users versus 43.5 lakh users last quarter, which is nearly 10.5% down QOQ. Besides this, the home segment is expected to maintain the healthy momentum, where the Africa operations could continue supporting the overall growth. And finally, the key monitorables for the street will include any commentary around the future tariff hikes, progress on the 5G monetization, and the management outlooks on the premium subscriber additions going ahead.
Okay, thank you so much for that, Darshita. Now, Kunal, I know your views on Bharti, in fact, so I don't want to repeat that. I know that you're a long-term holder. You like this from a long-term story perspective, difficult to sell, but near-term weakness. Firstly, assess that for us. Is my thesis right? What about Vodafone?
Yeah, I think Vodafone is something which I believe at the current juncture looks extremely attractive. So purely momentum trading or a fresh breakout play, I think, is happening for Vodafone Idea, where the stock has looked extremely attractive. There's a different kind of a wave or a price uptrend which has come back into Vodafone Idea. because the earlier moves, the stock used to struggle to try and come back into a multi-week uptrend. But this time around, it's been almost linear, where the stock has moved up higher from 9.5, 10 levels to now 12.5 or 13 plus mark, or closer to 13 levels, where it's attempting as a breakout. This also coincides with a multi-month breakout for Vodafone Idea about this 12.5 to 13 levels. So that also augurs very well. And Bharti Airtel also, I think on the long-term charts, even though the stock has gone through a decent correction, I think long-term investors should look to utilize this correction. It's a very rare opportunity for a stock like Bharti Airtel. Even if you look at the last 4 to 5 years, you will hardly see a phase where the stock has corrected more than 20-25% and stayed at those levels for a prolonged period of time. So I think this is one of those very rare times where Bharti Airtel has provided that kind of a correction. I think as a long-term perspective, should be lapped up.
Okay. All right. So that's the take with regard to Bharti. What we'll do is slip into a very short break. On the other side, we'll continue conversation. Staying also with us in the studio, by the way. And we'll continue conversation on the other side of this break. We'll get Investec Capital Services' view. We'll have Mukul Kochar who will come in, give us his views with regard to the market. Stay with us.
Back with closing trades, and so much to talk about the way the market has been reacting today ever since the get-go. We continue to hold on to gains or in the range of about 0.4% for the Nifty. 23,474 is a level where we are at. Kunal, earlier in the day, for a brief second over there, we've managed to cross 23,500, but then we've slipped back, and there has been pressure that's sustained on IT and auto over the course of the day. What's your outlook on IT? Let's start by talking about that, because you do have some pressure that continues to be on this index compared to yesterday as well, where we've seen about 3 or 4% cut over there, another 1% cut on IT, and it's names like LTI, Mindtree, Infosys that are deep under pressure. Any view on the charts?
Yeah, for the IT index, it's still bearish, weak, negative. Call what we want to, because there is hardly any sector, stock within the sector which is looking as a breakout candidate. A few days back, there were a few move towards the likes of Tech Mahindra and maybe in the mid-cap IT names, L&T Technology Services, Coforge, etc. But these stocks have seen a lack of follow-through up move. So maybe I think you need to have a jolt of either some strong, extremely strong positive news flow for the sector to turn around, or there has to be a slew of which could also trigger a slew of short covering for the IT index. Till the time we don't see that, it's more of an inertia move where these stocks, because of the weight of correction, specifically in the last 3-4 months for the IT index, I think because of that weight of correction, the stock would keep on dragging lower for themselves.
Anything in IT or software that looks good, and I'll ask you why. We've seen a disproportionate of sorts. At least there's an argument which says that we've seen a disproportionate correction now within IT. There has to be a stock or two which could be very good contra picks at this time.
See, in a falling market, in a falling asset class or an index, you have to wait for a point where some of the constituents come into an oversold category.
Right.
So maybe that could be a first group of set of stocks which could probably lead into a short covering bounce. The other category is that even if the index is falling, there are few strong large cap names which become outliers. Correct. We are not seeing either of the 2 points for the IT index. That's why it's very difficult to try and take a contra call on few of the stocks on the IT index. You might have 1 or 2 exception, maybe a 3-4-5% move for individual stocks. But you're literally, if you're looking at a change of trend into these IT stocks, calling in the current scenario at the current data point without any kind of a positive news flow is extremely difficult.
And the other big drag, Kunal, is coming from auto. What's the take there, and any picks at all?
So yeah, auto is a different case altogether. So even though the index is weak on the short-term charts, but there are a few exceptions over here. For example, Bajaj Auto, the stock is looking quite fabulous on the chart. The recent breakout, the up move for Bajaj Auto has put the stock back again at the pedestal about 10,000 plus levels. So I think closer to this 10,000 mark, I think would be a very good point where traders could look at Bajaj Auto as a potential up move candidate. Few of the other names which have dragged in the last, I think, few weeks, M&M, Maruti, TVS Motors, etc. These stocks will take some bit of more time to try and go into a recovery mode. But if I have to try and maybe select handful stocks, I would look at Bajaj Auto and maybe some sort of a move on Eicher Motors, which could be pending on the upside.
Okay, the other stock to talk about right now is HPCL. Just drawing your attention to the flashes on the bottom of the screen, the HPCL analyst con call is underway, where we're getting comments from the management on their quarter four performance. Quarter four performance has been a big beat on across all metrics rather. That is why the stock is doing so well. But we do have the HPCL chairman who is cautioning in terms of the financial performance in quarter one, where he's saying that losses are expected in quarter one and a lot of pressure is expected. However, on the positive side, they have secured their long-term crude supply for now. So that sounds really good. Kunal, a chat check on HPCL. It's a 5% uptick coming in on that stock on the back of some good earnings, but then it's the commentary that we are watching right now.
I think it's trickled to the other two stocks also. I think IOC as well as BPCL, I was looking at the charts for all three of these names, and they're looking a little bit more better. So, it's a pure play of risk reward over here for the OMC stocks. Now, either you can bet that maybe, if there's some sort of a spike in the crude oil prices, then you might probably expect these stocks to sort of underperform. But I would believe that if the stock prices are consistently taking a bounce and not falling in the difficult market times and being a lot more resilient, that itself is a case of a stronger degree of outperformance. I think at current levels, I would be bullish on few of these OMCs, particularly IOC, even HPCL at the current juncture. They look attractive. They have taken support at their respective 50 DMAs. That's a good point where traders could look at a support and try and establish some bullish trades over here.
Let's get the fundamental view going as well. Let's bring on board Mukul Kochar, Investec Capital Services, joining us. Mukul, how are you viewing markets at this point? Anything that you're finding interesting? How are earnings shaping up for you, in your opinion, Q4?
So let's start with the earnings first, because I think earnings are going to be the big driver and what to watch for. So Q4 earnings have been really solid, yeah. So just to give you an idea, it's so far quarter to date companies reported PAT growth is north of 20%. This is BSE 500 as a pack. Companies reported quarter to date. More importantly, if I annualize this Q4 earnings, I already get to my BSE 500 FY27 earnings. That is, if I just multiply the Q4 earnings of the companies reported so far, I get to analyst projections for FY27. Typically, because India is a growth economy, if I have average do a trend of the last 5 years, typically you get an upside of 10% once I annualize Q4 earnings. So more than likely, we earnings have bottomed, and from here you will see upside to analyst estimates for FY27. There's enough momentum in the economy. What the market is worried about is Q1 and Q2 earnings, because commodity costs will see a spike for the full term of the quarter. However, we believe that there's pricing power in the companies. They will be able to pass through this cost. And overall, when you get to the other side of the quarters, you will see FY27 earnings at the same level or higher. Now, this is honestly what has been underpinning the market as well. Despite the fact that the war has been ongoing, market has recovered smartly. The mid-cap index is at neutral for the year. The NIFTY has also seen a smart recovery. So the recovery is happening because of a good earning momentum. And last point on this, typically a rupee depreciating environment and a higher inflation environment is good for the markets because it's good for earnings growth. Yeah, so all this ties in. For the market, I'm pretty okay. Of course, if this war prolongs beyond July, August, and we start getting shortage of crude and, the crude price blows up beyond 150 and things start shutting down, that's a tail event that is not getting priced in by the markets today. But in all reasonable scenarios from here, we think the market should be fine.
Okay, so that sounds optimistic, Mukul. Hi, good afternoon. This is Nehi also joining in. Now, you've spoken about sectors that could be affected via their supply chains because they have dependence in the Middle East and a lot of other factors at play. Any sectors that seem protected from this volatility, because it's anybody's guess how long this war will last, but anywhere that you're seeing comfort either on the back of valuations or just for the fact that they could be rather domestic focused, something like a consumption maybe?
Actually, more importantly, I think the theme of the next 5 years from India is going to be manufacturing exports. We've been talking about this all year, and I don't think we're going to change our tune on that. Let me explain briefly why so. uh, India last year had trade treaties or open permission to export to countries through trade understandings with 20% of the global economy. In just 1 year, that number has jumped to 72%. The EU trade treaty, the Australia, New Zealand, UK, the US BTA, which is in the work, but we have some understanding on how trade is going to work with the US. India historically has been a very closed economy. So manufacturing exports never had a chance to take off because we didn't have good reciprocal agreements with countries. So for example, versus most of our competitors, we had higher trade tariffs if any of our manufacturing companies tried to export to Europe. Now we are at par or better. Yeah. So I think the next 5 years is going to be about manufacturing exports, regardless of how this war plays out. Already I'm seeing a lot of optimism in when I speak to companies, for example, electronic companies, they are getting up for exports. The government is set to announce a PLI for smartphones. I talked to some auto component companies, their exports are doing nicely and they're very bullish about the prospects. So that is one section of the economy that we are actually honestly quite bullish on. I mean, if you believe in defense exports even, yeah. So that's one segment of the economy, I think, which is fairly immune to what's happening here and over a near-term and medium-term period should do quite well.
How do you reconcile valuations there, Mukul? I'm very curious to know.
Yeah, so, okay, so again, let me give you some perspective with numbers here. In services, yeah, the services exports market is roughly a $10 trillion market, yeah? And we do $450 billion of services exports, yeah? So we're 4.5% of the services export market. We are 3.5% of global GDP. When it comes to manufacturing export, the total market is 25 trillion roughly, give or take a trillion. We actually are just 1.9% of that market. Our GDP market share, again, as I said before, is 3.5%, right? So we are practically half of what our proportionate market share in manufacturing exports as it should be, right? And there are substantial tailwinds, as I explained, with manufacturing exports. There's a desire to de-risk China. China is, by the way, a 16% market share, which is more than 8 times our size. So one thing is we'll take market share away from China. GST has been helpful. Government has cut effective tax rate, which has been helpful. Electricity cost in India 10 years ago used to be a 20% premium to US and China. With open access, in some instances, we are lower, right? Logistic costs has improved. So in all this, manufacturing exports should grow, I think, from a very small base at a fast pace. That fast pace could be 15 to 20% dollar amounts in many cases because the base is small. As I said, it's just 1.9% and proportionate should be 3.5%. I believe we will get more than that given the enabling framework that has been put in place. So off a small pace, high growth. If we're getting some manufacturing companies for 30 multiple on FY27, and which we are getting today, I'm happy. I'm a happy buyer. So valuations, short answer, valuations have also aligned given the long runway for growth in manufacturing exports.
Right. Okay, that's a very interesting theme that you've pointed out, Mukul, manufacturing exports. The other theme that has been here for a very long time now is artificial intelligence, and India is still trying to learn the ropes when it comes to that theme. And, we're still grappling on to the idea of AI. In fact, every time, take yesterday's example, OpenAI coming out with a new feature, every time there's a new plugin or a new feature, you're seeing a sharp correction on Indian IT. Where do you think we're headed in terms of adoption, and how quickly could we turn things around when it comes to IT?
Yeah, it's a good question. So I've explained this a few times before. So IT, there were 2 impacts. Yeah, one was Indian IT services, especially large Indian IT services companies, were fundamentally overvalued. As I explained, we are already 4.5% of services market share globally, right? So at best, we can grow services at global GDP, which is 3 to 4, 3.5% or so, or slightly more, maybe 4 to 5%. Right? In this, the larger IT companies will grow slower, maybe 3% and 3 to 4%, and the smaller IT companies which are nimble and niche and some niches which are working, they'll grow faster. Yeah. On an average, Indian IT will grow at roughly 4% or 5%, which is a fair sort of assumption at this point. For a 3-4% growth company, paying 18-19 multiples, which we were paying on forward basis like 6 months ago, was untenable. We were saying these stocks are very expensive, stay away. When they approach a valuation of 13-14 times, we are pretty okay, yeah, on even on the large cap side. But they're fairly valued. One can select which one is going to do well or not. But the smaller companies which are able to go faster, attack niches, they may be better off, right? That's just the IT stocks. But a broad comment on IT, I have been following this sector for 20 years. I have never seen a company globally cut IT services expenditure in any year, right? IT services is a productivity and revenue generating tool as seen by many companies. Most companies, when they budget, Fortune 500 Indian companies, every year they budget a higher amount for IT services. It just gets allocated to what is the best thing to do at that time. This year, the best thing to do is AI. Yeah. So most of your budget will go towards AI this year. Yeah. Okay. Now, when it comes to AI, there are two things. There is the foundational model or tokens that you pay for, but I think a significant stream of work will also evolve in application AI. And this is where India will do very well. There may be a year or two disruption where, these things get reconfigured, but I don't expect India's services pie to get impacted, especially in IT services. If you look at the medium term, there's been a lot of disruption which has happened in the last 20 years. I have never seen a single year where IT services budgets have been cut by any global company.
So at what point do you buy IT, Mukul?
See, even today, as I said, if I see an interesting company which is, maybe doing foundational work in AI services or AI related services, which will grow 15-20%, I'm a willing buyer. I think that those companies will do very well. Large cap IT, I'm not too sure. I mean, 13 multiple, 3-4% growth. I'm not a seller here. And for benchmark funds, I would definitely say go neutral on these. It's not a time to sell. They're fairly valued. But yeah, the real excitement will be in some of these new companies that come up, which are really, really, nimble and are using the latest tool to solve problems for clients. Yeah. But overall, IT services budgets will be fine. Yeah.
Yeah, right. Mukul, quick follow-up. So 15-20% growth at what multiple?
This is for going back to manufacturing?
No, this is with IT. You said you'd be very interested.
The smaller companies, the smaller companies. Yeah. So honestly speaking, when some of these larger IT companies, when they were small, Infosys, when it was small, they used to grow at 30%, trade at a multiple of 30-35. So roughly, while I'm not a big believer of PEG ratio, you can say PEG ratio of 1. PEG ratio, by the way, has no financial underpinning, so don't take it too seriously. But roughly, growth and multiple matched. So, if a 20-25% growth company grows, trades at a 30-35 multiple also, I think it's fair value. One should just be able to believe that this growth has legs. Yeah, it is not just a one-year story.
Okay.
I'm just saying broadly. Yeah. And you have to remember these are high return on capital businesses. So most of your earnings translate into cash flow. Sorry, go ahead.
Yes, no problem. Understood. So that's your take on IT. We've spoken about IT and manufacturing. Mukul, your take on financials. Do you believe it's an overplayed sector right now? Because keep in mind the kind of earnings that we've seen for Q4. Do you believe financials largely, especially the large private sector banks, are an overplayed theme right now, or do you still see potential over here?
See, financials is a stable, steady sector. Yeah. And, there's always some play there. I think well-run banks have significant moats. You should still invest in them. Yeah. but they are compounders. Yeah, so they'll give you 13, 14, 15% growth, which is actually very good for a market where inflation is roughly 4.5%. If I'm getting 13, 14% return in some stocks, I'm a happy buyer in a liquid name like that. And there are some large cap names, while I can't talk about individual stocks, both in the private and the PSU space, which I think will give those returns. Yeah. So they should be a core part of your portfolio. They're a liquid name. They're a significant part of Nifty. So yes, there are financial stocks I want to own, which are very moated, which will grow for many years, compound from here. The risk on the balance sheets is very minimal at this point, and I'm a buyer there. But as I said, if I'm looking for alpha, really multi-bagger companies out here, financials is not the space for that. I think manufacturing exports is the right place to look for that. So when you're building a portfolio, yes, there is a place for financials there, but definitely the manufacturing exports is where you'll get multi-baggers.
You believe, Mukul, FMCG and consumption as a theme is going to make a bit of a comeback in FY27 or not quite? It's been a while honestly, since we've seen a lull there. It's been so painful, right?
Yeah, expectedly so. It's been a decade since I've looked at those companies. Yeah. So you can trade them for 5%, 7% because HLL has given a good guidance, but that's pretty much it. Yeah. And let me explain this. Yeah. So the Indian, as I was explaining, manufacturing exports. Yeah, companies are 2 billion, 3 billion. 4 billion, 5 billion. If it's a very large company like L&T, it can be larger than that. But there are very few companies in that range. Yeah. Most of the Indian consumption companies are already exceptionally high market cap. Yeah. And they are reflective of what our economy used to be. I mean, our economy was and is still a consumption and services-based economy. So no surprise, these are the companies which have taken a bigger profit pool of the economy and, which trade at high market cap. Yeah. Manufacturing was never our forte. Yeah. So these are small companies, small profit pools, small market caps. I think the next 5-10 years, that trend is going to change just because the government's policy focus has changed. Yeah. We always, encouraged consumption by subsidies, etc., which came at the cost of infrastructure spending, which came at the cost of policy and focus, which changed, honestly, in the last 5-10 years. So these companies are so large, they're the companies of the past. Yeah, they reflect policies of the past. The policies of the future and growth of the future will happen in manufacturing, and that's where my focus is. I'm not interested in recommending a sub 10% growth company trading at a multiple of 45. Yeah.
Mukul, I can bet that Snehi disagrees. Unfortunately, she covers consumption. She's not going to like your answer at all.
But this is by the large consumption. Here also, you may have a small company growing fast where I can justify something. But, staple consumption is an overplayed sector in India, reflective of the current economy. 60% of our economy is staple consumption. Yeah, but discretionary consumption, I mean, there's a lot of play there. There's some good companies discretionary that we're recommending on our desk. Smaller though, because discretionary consumption itself is small. We're a poor country. But discretionary consumption is where I'm willing to pay that 40-45 multiple. Yeah. Not
so Mukul, for a change, I'm pulling her leg on air. That's all. Nothing else.
All right.
Anyway, we leave it at that. Thank you so much, Mukul, for coming in and giving us that perspective.
Thanks a lot for having me. Appreciate the discussion.
Perfect. Thank you. Meryl, in fact, standing by as well. Some of the stocks that are there on our radar, some buzzers in the market. It's a decent market, really. Give us a sense, Meryl, what's on your list?
Yes, these are some of the buzzers that we've seen in today's trade. Starting first with Jyoti Structures, the company is in focus after its joint venture with Fenton has gotten an order. Now, this is an order for a transmission line down in Sri Lanka, where completion expected 18 months from today. This order is for around 68 crores, a small company but making big moves in the market today. Moving on, Power Finance Corporation is in focus. Revenues up a tad bit, only 2.5% on a year-on-year basis. Profit is up almost 24%. The net interest income for the company has fallen around 7% on a year-on-year basis, with the margins expanding and asset quality also improving for the company in tandem. So Power Finance Corporation is one name that we've seen buzzing. Moving on, OneSource is also in focus. Profit for the company over here is down almost 95% on a year-on-year basis, with its EBITDA almost halving on a year-on-year basis again. Now, the company scrapped its proposed M&A transaction along with Steri Science, noting that they will revisit this proposal only after the successful delivery of respective companies' FY28 guidance. So we've definitely got something to watch out for in terms of OneSource's fourth quarter results. Moving on, GK Energy is also in focus. Revenues up 35%, supported by a higher execution in its EPC as well as solar solutions businesses. The company's PAT also has recorded quite a strong growth, around 32% up on a year-on-year basis as well. So yes, these were some names that we've seen buzzing in today's trade.
Meryl, thanks so much for taking us through that. So some of the latest updates on some of the earnings candidates and otherwise also. That's the list of stocks that Meryl has highlighted for us. But on that note, time to slip into a very short break. A lot of interesting conversations and discussions lined up on the other side. So you stay tuned and we'll be right back.
Thanks for staying with us here on Closing Trades. Let me get you a breaking which Prakash is getting for us. Union Cabinet has given a nod to new coal gasification scheme today worth 38,000 to 40,000 crore odd. Prakash here with all of the details on that one. What are you hearing on this one, Prakash?
Well, sources are suggesting that the scheme has been approved by the Union Cabinet. In fact, Coal Ministry has prepared this scheme with some additional benefits. The overall outlay, which has been approved by the Union Cabinet, is roughly around 38,000 crore to 40,000 crore. This will be altogether a different scheme as compared to previous one. You are aware of the fact that the Cabinet, the government has already approved a coal gasification scheme with an outlay of rupees 3,500 crore a few years back. The scheme, the amount has been exhausted. Now, the Union Cabinet has approved a very comprehensive scheme, completely new scheme with an outlay of rupees roughly 40,000 crore. The objective of this scheme is to expedite coal gasification projects in the country. In fact, coal gasification projects will be set up near gas-based power plants and fertilizer plants. Gas produced from these coal gasification projects will be directly supplied to these projects which will be crucial for their viability. A very significant development coming in. In addition to that, sources are also telling us that the Cabinet has also approved MSP for Kharif season. In fact, MSP for roughly 13 Kharif crops has been increased based on a formula. And the Union Cabinet, the government is likely to make formal announcement a short while from now. A very significant development coming in. Some infrastructure projects were also there on the agenda for the Union Cabinet, which have been approved. Some projects such as redevelopment of Nagpur airports, metro expansion of metro networks in Ahmedabad and some other cities, along with some railway projects are also there. So these projects have been proposals have been approved by the Union Cabinet, and we are expecting formal announcement short while from now. Back to you.
Okay, Prakash, thanks so much for taking us through that. So yes, that's the latest on the coal gasification scheme, and those are sources to Prakash confirming that the government has, or rather the cabinet has approved of this scheme.
But Snehi, let's also highlight some stocks
yes.
on the back of that. BHEL, Coal India, some of those names will be in focus. Let's quickly pull those names up. Let's see if there's any reaction on those counters. Also, within the PSU pack, Kunal, any of those counters looking good? 3.5% uptake on BHEL. Let's also pull out a Coal India. Okay, not doing as well.
What about a GMDC? Something like a
GMDC as well.
GMDC, Bharat Coking Coal, all of those stocks could also be in focus. So let's pull up those charts as well and see if there has been any momentum, because these are largely coal and lignite related companies. So you have a GMDC that's indicating this up move. It's 3.5%, slightly more than that kind of move coming in on GMDC. And Bharat Coking Coal is the other stock that I want to see, along with the Coal India, of course, to see what kind of uptick we're seeing over there. But Bharat Coking Coal, okay, decent move. About 1.7% higher on that one as well. Kunal, Bharat Cooking recent chart history, but anything on GMDC?
Yeah, this could be a significant development, because if this happens, then we can expect both of these stocks, Bharat Cooking Coal as well as GMDC, to start to show signs of a decent, at least recovery for themselves. I would not say maybe a major uptrend which could bring the offering, but at least a decent recovery, because both of these stocks, even on the short term as well as on the medium term charts, have been beaten down. GMDC was a stock which is almost at 750 a few weeks back. That stock has come back towards 650, 660 mark. Even for Bharat Coking Coal, just about, I think, a few weeks back, the stock was trading at 37, 38 rupees. It's come back towards 33 mark. So a decent 10% correction which has happened to these names. We might probably expect these stocks to go into a recovery phase.
Okay, let me in fact bring on board Pashupati Advani, who's been waiting by very, very patiently for us. Thank you so much for joining us, Pashupati. He's obviously global foray, needs no introduction. Pashupati, how are you seeing markets of late? At least over the last week or two, we've had a choppy ride.
Well, today at least we have a smile because lots of green. And I think that is there. But we basically, as you said, had a choppy ride, 4 days down, 1 day up. This day is obviously not going to take care of the 4 days. Stuff is all over the place. I guess the ones that led us up are the ones who are actually giving something back. So it's a tough time because, we do. Well, just as an example, if, Modi ji said not to buy gold, so that's not good for jewelry stocks. So they're basically in a bit of a mess. And then plus he's hiked the import duty from 10 to 15% on gold. So all these things are good measures, but some of them are not market friendly at all. And I think that's one of the challenges. I heard you just mentioning about Coal India. The thing is that the government is doing an OFS on Coal India. So that's not a stock that you would actually be able to compare properly because they've already announced that the OFS is coming and it's going to be pretty soon and for a large number of shares. So I think the fact that it hasn't moved at all is probably because of that, other than the fact that it would have naturally moved 2 to 3% like its other, brothers, if you want to call them.
You're bang on there, absolutely, Pashupati. But give us a sense, how is it that one should view the PSU pack in particular? And the economy in general, actually, before I come to the PSU pack, do you believe that there's a sense that there's going to be a self-engineered slowdown of sorts? Is that fear very real in your opinion, or do you believe that that's overdone?
No, I think there has to be a slowdown because we've got inflation coming in. Gas and petrol and diesel prices are obviously going to go up at the pump, if you want to call it. And also, you've got all these other pressures because of the war and because nothing's coming out of the Hormuz states. And as a result of which, these companies this inflation is going to be passed on to the consumer and things are going to go up. Now, one of the crazy things that's happening is there seems to be some tightness in getting LPG. And as a result, a lot of people have started cooking on induction. And when you cook on induction, the non-veg doesn't cook as much. So that's going to have its own issues. So all in all, I'm saying that we are in for change. Modi ji came on the TV and said we have to start being austere. It's the first time in many years that there's been any leadership that has said we need to actually control. And he's just mentioned it, but I think he's trying to make sure that everyone is on the ball and actually trying to restrain. And even the Singapore PM said the same thing, except the Singapore PM did mention that they're better prepared, and also the Chinese are super prepared. That's one of the things that's happening.
Okay, point taken. Let's also welcome on board Mr. Shrikant Chauhan of Kotak Securities joining us on the technical front. Shrikant, hi, good afternoon. What are the levels that you're watching watching on the upside for the Nifty now that we've seen some speck of green on the street today? What are some of the next significant levels to watch out for?
Yeah, good afternoon, everyone. So for Nifty, we are of the view that 23,600, 23,800 going to act as major resistance for the Nifty. I'm not of the view that the market can surpass this level so easily. We need some reason to cross these levels. But based on technicals, maybe there is a possibility that we may again revisit to the levels of 23,300 or maybe 23,100 in the near future. That's the view. So at higher levels, we need to be careful. And in case if the market breaks today's low, then the chances of hitting 23,100 or 23,000 would turn bright.
Shwati, how are you looking at some of the power financiers, IREDA, PFC, REC? You know, we've seen a large consolidation of sorts in that pocket. Believe this one-time book is something that they're fairly valued at. Of course, IREDA trades at a premium, but PFC, REC, roughly one-time book, and there's obviously a merger also at play over there, which could unlock some amount of value, hopefully, or efficiency, hopefully, between those two entities, build out a larger entity. How are you viewing developments there?
So, you know, as you mentioned, that there is merger, there's some synergies in doing a merger, and therefore people are looking at that sector. But the reality is that we've become a very boring market. And of course, you have to be in sectors like this because, you know, they're actually the growth sectors. But again, it's very difficult to find sectors that are not supported by the government and also have a mind of their own who are going to be able to make serious money in this. Because we're seeing, you know, we're seeing earnings actually go off. Some of these companies are fine, but, you know, I know your earlier guest was quite bullish on IT, but I'm not. So I just feel that, you know, IT being a large part of the index is pulling us down. Again, you know, oil and oil producers also are going to have some issue, and they're also a large part of the index. And so, you know, it's going to be very difficult for things to jump in that sense. And we're demand and supply. And I guess for the last month, the FIs have been the supply because they've been dumping. They've dumped, what, 20,000 crores in the last 1 month? So it's a big number.
Okay, so that exodus continues for us, unfortunately. But shifting focus, let's pivot to the conversation that my colleague Anurag Joshi had with Parminder Chopra, the chairperson and managing director of PFC, over their Q4 numbers. Listen into a slice of that chat.
PFC, we have always tried to balance the same, and we are tapping the diversified sources of funds. If you see the borrowing plan of PFC for 1,60,000 crore, so even for the current year, we have 60% raising from the bond and 20% from the term loans and 20% from the foreign currency. I agree there has been volatility around the foreign currency funds, but when we go for the external commercial borrowing in the form of syndicated loan, we get a better yield as compared to the bonds in the market. And from the term loan and the domestic, it's the timing when we hit the market and we try to balance out our cost of borrowing by that way.
Right. Coming into this quarter and also in FY27, if interest rates were to move up, if the RBI is going to raise rates, you see an impact on profitability in this FI?
See, I think for any of the financial institution, if you talk even for the banks, the cost of funds is a part of the lending rates which are being decided. For the banks also, it is the MCLR rate, which is of that, the cost of the raising the funds along with other costs, associated costs are factored into while deciding the lending rate. And so is going to be for the PFC. So for us, whatever spread we are going to earn, I think that is going to be crucial for deciding our profitability going ahead.
Right. And also, you know, profits of over 20,000 crores now. This is the pace. I mean, take us through what has helped you achieve that in FY26.
So in FY26, there has been, it was a very, I will say that it was a tough year in some occasions, but on the other side, the business has been good. We have disbursed around 1,65,000 crore of loans to the various utilities and for the power sector. So if I see that there has been 13% increase in our net interest income. On the other side, if we talk that the resolution of asset and reversal of in the expected credit loss to the tune of around 1800 crore has helped us to achieve the numbers which you are looking at for the growth in the profitability. While it has been negative on the volatility in the forex, which has been absorbed by the other factors in the income.
Right. Ma'am, give us an update about the progress of the Power Finance Corporation's merger with REC. Is that going on, and by when are you looking to complete the merger, given the fact that the FY27 budget had mentioned about both the financial institutions merging?
Yeah, you rightly said that the budget of FY27 has announced the restructuring of PFC and REC. Consequent to that, both the boards have decided to merge both the entities, and it is expected that from 1st of April 27, the merged entity will be in place. For that, that as per the process required, you need to have a lot of regulatory approvals, which include MCA, RBI. Being a listed company, we need SEBI approval, and all those statutory approvals will be required apart from the different processes. We have already appointed the legal consultant, transaction advisor, and the valuers in the process.
Right. Also, your NPAs now, you've reported 0.13% in FY26. Okay, and there's been a significant reduction in the gross NPA percentage. Are there any kind of assets on PFC's books, which you feel are of concern, which you would try to, probably restructure or would try to remedy in this FY?
I think on the NPA front, the worst has been past for PFC. If I talk, we have already resolved around 85% of the stressed assets. If I talk about the peak assets in the non-performance category, around more than 30,000 crore. So right now we have around 6,000 crore in the NPA category, of which if we say that around 25% of the assets are in advanced stage of resolution. So two of the assets which are constituting 25% are in the advanced stage of resolution. And on the balance, we have more or less 100% provided for, and we are not looking as of now any new NPAs, majorly new NPAs falling in the category for the stress.
Right. PFC is also a key borrower of foreign currency loans and bonds. Given the fact that there's an uncertainty about the conflict in West Asia, inflation is rearing its head globally. How will that affect your offshore borrowing plans?
On the borrowing front, as I said, that generally our policy is around 20% borrowing from the offshore market. But yes, definitely the crisis in the West Asia, we are monitoring the markets regularly. And as and when we find that they are conducive for borrowing in the foreign currency, only then we will be approaching them.
Back with closing trades, and earlier in the day we've seen a very interesting note coming in from the House of Nomura on what they're making of this custom duty hike that we've seen by the government on gold and silver. The note largely focuses on the impact on jewelry stocks, particularly Titan. But let's talk about what the news is. Of course, we're all aware now this jump has happened from 6% to 15%. And this is going to increase the landed cost of gold for domestic jewelry and the overall industry. That is what Nomura is pointing out. They've come out with a table in terms of what the custom duty used to be for gold since 2012, how many times it's been hiked and how many times it's been lowered again. And that's a trend that you can see all the way from 2013, and then we'll have some more numbers coming in to about 15% now. It was 15% back on 1st July 2022 as well, after which it was cut to 6% in 24, and now it's back to 15% in 2026. Now, more importantly, the note highlights the implications on various aspects. The first being demand, saying that the duty increase of 9% could largely be passed on by jewelry players, but then this could also dent the kind of sentiment and the demand reliance or the resilience that we're seeing rather from the customers. The sharp 9% hike in one go may impact near-term footfalls and sentiment, but at a bigger level, this could also taint demand for an overall basis or a long-term basis, is what Nomura is pointing out. Within the jewelry basket, they're seeing investments-led purchases in gold coins or gold bars could see the most impact. Daily wear jewelry could see some nominal impact, and they're expecting the least impact on diamond and wedding jewelry. The other implication could be a hike in smuggling of gold jewelry that we could see. This also materially widens the arbitrage opportunities in gold. So that's other impact that they are pointing out. The third they're saying is could be potential one-time gains for the industry. Now, jewelers carrying lower cost or already inventory on which duty is paid, they will benefit from one-time inventory gains. For Titan, this gain is expected to be around 500 crore rupees, which is coincidentally exactly the quantum of the amount that they had lost when the import duty was cut from 15 to 6%. And a large part of this gain could also be passed on via promotions. So that is a positive that they're pointing out. And lastly, they're saying that lessons from 2013, when the import duty over time was hiked from 2% to 10%, Titan was a relatively better player. The small players were impacted. Working capital requirements, yes, for Titan had gone up, but the gross margins, they continue to remain resilient. So on the back of that, they've maintained their buy rating on Titan with a target price of 4,950 rupees per share. And they're saying that the Prime Minister's comments could have some near-term demand and sentiment impact. Wedding jewelry that makes up about 15 to 20% of Titan sales could see negligible impact, but yes, the bigger impact could be seen on the entire gold basket, while diamond jewelry and the lower ticket size jewelry could be safe. In fact, echoing this same sentiment, we spoke to Ajay Chawla, the MD of Titan, a couple of days ago, and here's his view on what he feels could happen within the jewelry segment now that this entire custom duty hike is at play. Listen in.
We are seeing good growth in CaratLane. The opportunity is very large and they are well positioned. In fact, the product mix is doing very well. We've also signed up with a new brand ambassador, Yami Gautam, and you've also been seeing it very live and visible on IPL. So CaratLane is going all guns blazing, and I think over the next few years, its profitability will be even higher than Titan because it's largely studded play. So we are backing it fully. It's really in a good position. We believe there is opportunity in the mid market. It's commoditized in the market below 3,000, where a host of players offering Me Too products. And then there is a reasonably decent size of business sitting above the 15,000, 20,000 rupees. But between this 3,000 to 15,000, there's an opportunity to make a good serious play. And we are focusing on that and beginning to see early green shoots on that. So while last year was a dull year for wearables, this year we are expecting to get back to growths and hopefully double-digit growths.
Okay, so that's the word coming in from the top boss at Titan. But basically what he meant to say in a nutshell is we quizzed him when PM Modi's comments had come in terms of when the Prime Minister said that reduce or avoid buying gold that's non-essential right now, postpone it by a year. So he was saying that on that note, they might not see a lot of impact as of now. Difficult to gauge since it's early days, but that's the word coming in from Mr. Ajay Chawla of Titan. But Kunal, a chart check on Titan. Let's see what the longer term performance has been for Titan. Titan today, of course, has been rather resilient in trade, but from the entire jewelry basket, if I have to look at a diversified play like Titan, how is that stacking up on the charts versus a Kalyan or a Senco?
You know, what I really like about Titan is the last 1 year of price performance, because the last 1 year is where gold prices had shot up significantly highs. We had touched, I think, 1,65,000 or 70 plus thousand for gold prices on the rupee terms. Even in that phase, Titan, apparently in the previous year, did fairly well for itself. To start off the year with 3,000, 3,250 levels for Titan and to end closer to the 4,000 mark, I think was a stellar kind of an outperformance the stock had shown. And even over the last, I think, few 2-3 months or so, the stock has been floating above the 4,000 levels broadly. I think very recently it was almost at 4,600 mark. This price correction has brought the stock back towards the 4,000 levels for Titan. So purely in that context, I believe that 4,000 seems to be a good support point for the stock in the near term. Maybe I think that could be a first zone where traders who have a longer term time frame, they could look at first tranche of buying Titan on the longer term basis.
Okay, Pashupati, let me come to you. What is it that you're liking? What is it that you're doing in a market like this? It's obviously uncertain. Srikanth, I'll come to you in just a minute. But Pashupati, give us your view quickly.
Sir, I don't really like IT, so I've been a little bearish. I think we need to be on the basics because the government is still continuing to spend for infrastructure. They're continuing to spend for roads, the steel, other base metals. Any company that has rare metals in it, those are the companies that you need to be where your business. And as one of your other guests mentioned earlier today, that any manufacturers that's actually doing export, they're the dream. That's the dream team. So we have to look for them. They do exist, and I'm trying very hard to find some.
Okay. Srikanth, let me come to you with some of those power financiers which we spoke about. PFC, of course, buzzing in trade today on the back of numbers. But what's your take on some of those power financiers on charts?
No, absolutely. I think most of these stocks have shown a good amount of upward activity in last 2 months. In last 10 days, if we see, then most of them have corrected from their immediate highs. But at current levels, most of them are quite attractive, especially PFC. We are specifically bullish on it, and we are of the view that 400 is now going to act as major resistance, major support for the stock. I'm not expecting stock to fall below the levels of 420, but if there is a positional view, then keep a stop loss at 400. Hold on to it. I think the stock is going to surpass its previous high. That's the view. If we go through with its with few other stocks, then in that area, there also the stock was around 128, 130 levels yesterday. Today we are seeing some bounce back, but broadly there also we are expecting gradual upward activity towards the levels of maybe 150, 160. So yes, REC, PFC, IREDA, I think these are the stocks to keep on the watch list.
Okay, so that's on some of the power financiers. But very quickly, let's cut across to Mr. Achin Gupta, the MD and Global CEO of Cipla, who's speaking to the press on his earnings. Listen in.
Markets beyond the cities. How's that going on? So it's continuing to show a steady growth. We've seen even a growth in April versus March, which means post generics entering the semaglutide market. We've seen a steady ramp up. So I think as we mentioned last time, we see these as two parallel markets, and we see certain advantages because of the mechanism of action with Yurpeak and tirzepatide as the molecule. So we are expecting it to continue following its own growth trajectory while the semaglutide market also opens up on the back of number of entrants. Does Cipla have any plans on the semaglutide market, or you're just going to stick to tirzepatide as well? So right now for India, we are focusing primarily on Yurpeak because we see that as a larger opportunity for us. For global, as the patents expire, we will come in with the other GLP opportunities, namely semaglutide. Right. My last question is, as we speak, Lilly's also launched the Alzheimer's drug. Are we looking at any more partnerships between Cipla and Lilly going forward in the future? We have quite a few partnerships with them. I would not be able to comment on the future partnerships at this stage, but yeah, we definitely would like to continue building on our existing partnerships. Right. Thank you.
Thank you, Rishika. Next, we have Vishwanath Pilla from Money Control. Over to you, Vishwanath.
Yeah. Hi, Achin. Good afternoon. And So just want to ask you, given the this West Asia war, and are you seeing any of your, I mean, like your contracts with your customers? Is there any force majeure clause invoked, or like how are you kind of some of the contracts? How are you dealing with your customers? Like, has anything changed the way you do the business?
Vishwanath, I think this is an evolving scenario. Our initial response in these kind of situations is always to try and cushion the blow through the inventories and the existing purchase agreements that we have. Only if it prolongs beyond a certain point, there are discussions with customers on how to, or whether certain prices, whether the cost increases can be passed on the pricing. We've seen a supportive environment, 6 years back when the pandemic had hit. I think right now we have not yet entered that kind of zone. We are probably at the cusp of it, but we will continue engaging with all of our partners, customers and the other, other buyers as well across the world, to see how do we maintain the supply security if the costs continue to go up.
Okay, so that's the word coming in from the management of Cipla on their Q4 earnings. Q4 has been largely weak for them, but overall FY26 has been a good year. Mr. Adani, let me come to you for your view on pharma. Yesterday, we've seen a very weak set of numbers from Dr. Reddy's. Today, Cipla too, only on a Q4 basis, is also a weak set of numbers. What is your view on pharma and the various baskets that we're seeing, the semaglutide opportunity, CDMO that's continuing to be at play? What's your take? Are you liking any themes within pharma?
Obviously, you mentioned about the Ozempic, whatever they call it. But I think that's here to stay. Lots of people are going, we've got a huge population that may want to take it, and that's good for the 20-odd pharmaceutical companies that came in. I think those pharma is going to continue to just chug along, and since it is export driven, and there is it has a logistical issue right now because things are not moving. But once they do start moving, then I think they will be back in business again, and the sort of temporary hiccup that they've had will go away.
Okay. Pashupati, what about consumption? How do you play that? Because you sounded slightly more bullish with regard to consumption trends, if at all I've got that right.
Well, what is going to happen to me is we're going to go back to the unorganized sector because that's cheaper and everybody's beginning to tighten their belts. And I think that is one of the things. Now, you've also got summer, you've got higher electricity bills. Everyone's going to be screaming when they come after a month or two. And, I don't think, with climate warning, it's certainly hotter this year than it was last year. So, it's tough times, and we have to, I agree with Prime Minister Ji that we have to tighten our belts. We have to do something. And, less is more. What you save today, you can use tomorrow. And I think that's something that we have to all go out and do. And let's see if we have the maturity to be able to do it. It's a tough thing to change people's lifestyles, but let's see what happens.
Absolutely. So it's a wait and watch game over there. Shrikant, coming to you, the other stock that's doing really well, not only today, in fact, for a couple of days, has been Vodafone. Now it's above the 12.5 mark as well per share. Talk to us about how are the charts shaping up for something like a Vodafone? Any upside potential from here?
Yeah, I think the way the stock is shaping up on a day-to-day and week-on-week basis, it is very clear that it is crossing all its important levels. And today it has crossed the level of 1280 along with good volumes. So decisive breakout that we can say on the daily chart as well as weekly basis. I am of the view that the stock is gradually heading for first 15 rupees and later could be 1650 or 17. So even at this level, if someone is having some position, then just hold on to it. I think gradually the stock is heading higher.
Paint stocks, because those are also buzzing today in trade. Shrikant, what's the take there?
In paint stocks, no? Yeah.
Yes, please.
So there also we are of the view that gradually they are moving higher. most of these stocks, most of these particular stocks from this basket have crossed their important resistance level. And based on that, I'm of the view that in the near future, we are going to see some more upside, especially for Asian Paints. I think gradually the stock is heading for 2800, 2850 sort of levels. So I'm not expecting great return, but gradually, yes, there is a possibility that 5 to 7% sort of activity is not ruled out from Asian Paints as well as Berger Paints.
Okay. Pashupati, let me come to you with regard to defense in particular. You spoke about government spend and maybe infra being one pocket which you're liking. Defense also likely one of those pockets given the kind of environment that we're seeing globally. And how would you play defense infra?
Sure. Sorry. Well, defense is actually, we want to be in defense, but it's very difficult to know where the government is going to step next. We definitely need to be in these stocks. Out of this pack, I actually like BML and I like Zen Technologies only because my challenges, I've been in and out of them, and now I'm out. So now to jump back in becomes a little more difficult. So, I picked them right, but then I exited too soon. That's always been my hassle in life. But again, that's why I say you continue to have infrastructure because the government is driving public's regular private companies are not really spending in infra. There are a few like the big groups that are doing so, but otherwise the second tier groups are not spending at all. And that's, I think, slowing down the economy, if that, you know what I mean. So let's see what happens.
So how should you play it? Do you have some names? Is there a tilt in terms of preference, rail versus road infra? Any kind of a tilt that you can give us?
Literally, you can play cement, you can play steel, you can play rare metals. They're all going to be used for the infrastructure, and they're all chugging along. I've been in and out of Vodafone. I kind of agree with one of your other panelists that says that it looks like it's structurally breaking out, and it looks like it's on the mend because the government is continuing to give them good benefits. And hopefully a strategic buyer will emerge and take over the company, and we'll have a public offer and all that, which will go through. So let's see when it happens. It looks like it's happening. So let's see.
Okay, that's the take on infra as well as a bunch of other sectors. Kunal, anything looking good from the pack of stocks that Mr. Adani was talking about, roadways, railways, cement, anything looking good from the infra basket?
Yeah, I think, very few select names from the railway stocks which are looking a little bit better. I think today, for example, Texmaco Rail, I think, is up some 10-12%. The last I had seen, that stock is looking attractive. IRCTC has gone through a huge correction over the last, I think, 2-3 years, 2020 to 23 onwards. Even Titagarh Rail Wagon, that's a stock which has corrected very sharply from 1,000, 1,200 plus mark towards 750, 770 in the recent leg of correction. So these are the few names which I think they stand to look a little bit better poised because of the correction, or the degree of correction which has already happened to these names. So, but for the sectors to try and come back into a big recovery mode, you need the markets to stabilize, because one-off days, one-off week, when the market corrects by 1,000 odd points on the Nifty, it's no mean feat, because then that takes these stocks and sectors which are hopefully on the path of revival back again to their previous swing lows. So the recovery becomes a lot more delayed, and the uptrend for these stocks takes a lot of time to develop.
Okay, and we only have about a couple of minutes left for market close. So, Kunal, what should be the strategy be come tomorrow? It's the weekly Sensex expiry day. The Nifty expiry has been full of pressure for us, but we've seen a little bit of a recovery today. What should the strategy be tomorrow, and what are some levels to watch out for?
See, I think there could be a scope that the markets may see a bit of stability. I don't expect too much of a gap up or a gap down for the index tomorrow. My expectation is that maybe I think just about retest 23,500 mark, 23,550 on the upside for the index, but on the downside 23,250, which we tested as a support, I think could be a range. So more of a broad ranged consolidation is what I would expect for the index tomorrow.
Okay, so that's the take on what to expect from the index. We have about 2 minutes left. On that note, Mr. Adani as well as Shrikant and Kunal, thank you so much for your time. Let's start winding down. It's been a very action-heavy street for the day for the street rather. You have some moves coming in on the positive side for the Nifty, no doubt, because we've seen some positive momentum, but all of that has simmered down once again as we speak, because now we're struggling to hold on to the 23,400 mark too. It's been a sharp correction of about 80 to 90 points in the last 10 minutes on the street. So that kind of pressure is something that's already building in. Nifty Bank has also slipped into the negative now. At one point of the day, it was trading with gains of about 0.7%. So almost 1% of a cut coming in on Nifty Bank. We're now holding on to the 53,400 mark. You have the broader end of the market that continues to do well. The small cap index is higher by about 0.3, mid cap doing slightly better, 0.7% of an uptick coming in over there. The India VIX is controlled in today's trading session, not that much of a flare up coming in over there. But if I take a look at what's happening sectorally, you have metals that are shining bright, 3.25% uptick coming in over there. Some of the gas stocks like GMDC, Coal India, all of them have done well on the back of the coal gasification scheme that the cabinet has now approved to the tune of 37,500 crore rupees. So that's an ET now exclusive confirmed. Names from the defense basket have done well. You have something like an MTAR Tech on the back of hiked guidance that has done well. Midhani, Data Patterns, Mascon Doc, all of them have done really well, as has been the case with Nifty Oil and Gas, because you did have word coming in from the RBI governor that if the case continues to be the way it is on the geopolitical front, fuel hikes could be on the cards. And on the back of that, HPCL, BPCL, IOC, all of them have done really well in trade today. HPCL, of course, also on the back of very solid set of numbers. It was energy, FMCG, pharma, PSU banks that have done well. PSU banks absolutely flat rather, with some pressure on autos, banks, media and realty. The biggest loser in trade continues to be Nifty IT, where pressure continues to build on something like a Coforge, LTM, Infosys and some more names from that pack. Now let's talk about the entire jewelry basket. You've had names like Titan, Kalyan, Senco that have been affected on the back of the custom duty on gold and silver being hiked. So that's the reason why the jewelry stocks are in pressure. On the flip side, this has borne really well for some of the gold loan financiers like a Manappuram and Muthoot that have done really well in trade. Some more earnings reactions that's keeping the street afloat. You've got good numbers coming in from Dixon Tech, so that's a stock that's done well. Pine Labs and Fractal Analytics, both of these stocks have been under immense pressure on the back of their lock-ins opening. That is what has kept the street occupied all throughout the day, and that's the basket of stocks to watch out for. Lastly, from the broader end of the market, it's names like SAIL, Vodafone Idea, IFCI, Vedanta, NLC, Nisho that are seeing gains between 6 and 14%. On the flip side, Pine Labs on the back of that lock-in. But you do have Torrent Power, eClerx, Cohance, Sun TV, Birla Soft and Credit Access all seeing cuts between 4 and 9% respectively. That is the breadth of the market, and that is how the trading day has panned out. Just to sum it up, we've ended around that 23,430 level for the Nifty, 0.2% higher. But with that, we're completely timed out on this edition of Closing Trades. From Harshmi and the team that put this show together, thank you so much for tuning in.